We're not live. Oh, wait.
We're live on 3 platforms except Instagram.
Okay, we're live on.
We're live on Instagram. Confirm.
Oh, we're already showing. We're already showing. This is what it's showing. Are people on Zoom seeing us? Okay.
Good morning.
Nothing's happening on Zoom.
Let's start. Okay, let's start.
Where is it? I'm going first, right? Good morning, everyone. Welcome to our first ever AMA session. We're excited to have you here. My name is Oguche Agudah. I'm the lead for media branding and communications here at PenOP. We're so excited to have you here today. This session is called Ask Me Anything. What does this mean? It means you are allowed to ask as many mundane questions as much as possible. We're here to answer you. We have industry experts on this session who are willing and ready to answer your questions. But before we delve into the session, please give us 5 minutes to make sure we have enough people in this session so that we can get as much questions as possible. 5 more minutes and we'll start. Thank you. Also, I forgot to add, we're not only live on Zoom, we're live on Facebook, we're live on Twitter, on Instagram, on YouTube, and on Facebook. You can join us and stream live on those social media platforms. Remember, we're not just on Zoom. We're on LinkedIn, Twitter, Instagram, Facebook, and YouTube. We're back. Thank you. I'm going to introduce him.
Guys on Zoom, can I see you? Okay, let's start. Let's start. Because I'm going to walk out of here. Let's start.
Thank you everyone for being here. Apologies for the delay. Also apologies for the itch on Zoom. However, we're going to start with the session right now. Do not forget we're live on LinkedIn and other social media platforms. With me in the studio here, I have my boss, Mr. Oguche Agudah. Mr. Oguche, are you ready?
I'm ready.
Are you ready to answer as many questions as possible today?
Well, I'm not the only one. There are also some other people here from the PFAs in various departments, whether it's an investment question, whether it has to do with contributions, your benefits, employment. We have some HR people here. So whatever questions, hopefully we can answer all your questions. So not just me, but so many experts also. So looking forward to that.
Awesome. So before then, I'll just like Mr. Oguche to talk a little bit about PenOP, so that you know what exactly we do here and why we're bringing up this session. So, Mr. Oguche.
Great. Thanks, Jumoke. I think, like she said, this is the first session we're having, and it's called Ask Me Anything. It's really an information session whereby you get to ask directly from the PFAs, from the pension industry, questions that have been burning on your mind. So we know that pensions is something that is critical. It touches a red nerve with everyone about your money, your retirement. What's the money being used for? When are you going to be able to get it? So we want to bring you close to the pension industry, close to your PFA, and we want to demystify some of these things. I know sometimes you hear AUM, PFC, RSA. What does this mean, and how does it affect you, the individual, the pensioner, the one contributing and waiting till when you're going to get it? So we want to allay your fears and want to get you closer to the industry. So that's really what we want to do. And PenOP is the umbrella body of all the pension funds in Nigeria, and we're just working with the pension industry to bring you this. And this is not going to be the first and last. This is the first year, but it's not going to be the last. We're going to have these sessions ever so often, and where we connect you closer to your pension fund and answer your questions, any questions, and hopefully we can answer them. All right?
Yes. So I have a question, and I'm asking on behalf of all the Gen Z, millennials in the country.
Okay.
So at what age am I supposed to retire?
Is that the first question? So I just want
That's
to
a question on my own mind, as
Okay.
per a young person working here in Lagos.
Okay.
And I'm like, I don't want to work till I'm 60. Can I retire at 50?
Okay. I think before we go to that question, maybe you should tell people how they can send their questions. So
Okay.
they can type questions,
Yes.
or how can they send questions to us so we get them coming?
So remember, we're live on all social media platforms and also on Zoom. So first thing you can do is type in your question. Please type in your questions on Zoom, type in your questions on LinkedIn, on Twitter, on Instagram, and on Facebook, and even on YouTube. Any question, every question is allowed. There is no dumb question here, and we're ready to answer your question. But before we even get into that, we have a few speakers, panelists on this session. We have Bolaji Fowokon, we have Adetunbi Adeye. Sorry, I'm murdering your names. We have Oluwatosin and a few others. But as we get into the session, you get to know them more. So remember, you can leave in your question on LinkedIn. Just type it in the comment section. Also on Instagram, if you're watching this on Instagram and it's live, you know that you can leave a comment on Instagram. So just type it in and leave in your question, and we'll see and we'll take it. Also on Facebook, also on YouTube and every other platform available. Remember, type in your questions in the comment section. So if you're watching me right now on LinkedIn, just type in your question on LinkedIn. There's a space for comments. On Instagram also, there's a space for comments. On Facebook, there is. On YouTube, there is. And also here on Zoom. So we're live on Zoom now. Welcome to the Zoom family. Thank you for being here. So we have a few questions that we had gotten as we were doing the pre-session, the videos, and the ads for this session. And we have some here, and I'll just ask Mr. Oguche, just write off so that we can just get into this session. So the first question here, Mr. Oguche, is how can you use pension to start a business?
Okay, let me be sure that the other panelists can answer. So I'm not the only one going to be answering. So I have bulletproof, so the questions are coming, but I want to share it around. And I want to see if Adetunbi can answer this. Adetunbi Ashai, let's test if you can answer this. Can you go ahead? So someone is asking, can you use pension to start a business? I think you need to help unmute Adetunbi. Or how is it going to speak? Adetunbi, give me 1 second. We'll get you to speak now.
You unmuted a few minutes ago. Adetunbi, you can unmute from your end actually.
Yes, I was on music and it was going back. It's off now. Can you hear me?
Yes,
Yes.
we can. Yes.
Okay. The question says, can you use pension for business and to start a business? And I will say yes and no. The sole reason that you have a pension is for sustainability, and it's to make you relevant after you've done a lot of work and you are retiring. So it is saving for the future. In the other line, when I say yes, like she said earlier, for Gen Zs, they will say they don't want to retire, they don't want to wait till they're 50 or they're 60. So some people come up with, let me resign now, after 4 months, get my 25% and invest in something, and use that 25% to start a small business. So that's why I said you can, it's a yes and a no. Thank you.
Great. Thanks for that, Adetunbi. So to your point, you can use your pension for business if you've resigned after 4 months. But if you haven't resigned, if you're still working, you have to wait until when you're retired. Adetunbi, can you chip in? Does the person have to be 50 years old? When is the retirement age in Nigeria? When can I start? If I'm working, when's the retirement age? You are muted. I kindly unmute.
Thank you. It depends on your industry.
Okay.
Generally, it's 60, but when you are 50, is the advised or regulated age of where you can have access as a retiree. If you want to have access to your full access to your pension, not your full pension. Sorry.
Okay.
So for professors, much higher. So let's just say from 50 on upwards, depending on you. But officially, yes, from 50, you can't even access your program withdrawals at that time. Once you have retired or you have resigned, you can.
Okay, from 50. Okay, so the Gen Zs, you still have some years to go.
What if I want my pension now?
All right, so let's keep the questions coming. I've got some other people also here with me who will answer. I'm happy. All right.
Okay, so we are having questions. Remember, you can drop it on Zoom, Facebook, Twitter, Instagram, LinkedIn, and YouTube. So I have a few questions here on LinkedIn.
Okay.
And it says, given the situation of the current exchange, how can Nigerian locals have a dollar-based pension, or what are the alternatives?
Dollar-based pension.
People are going into deep questions already.
Let me ask Dami. Damilola Adunake, can you try and answer this question? So someone is asking, devaluation, how can Nigerians have access to dollar-based pensions, or what remedy do they have? Dami?
Good morning. Am I audible?
Yes, Dami, you're audible. You can go ahead.
Okay. Yes. Contributors' monies can be invested in dollars. Investment guidance gives us allowance to do that. So if before now, the challenge has been how do you source dollars? What do we do? That's where the gray area is. Are you going to queue from IFB line to get dollars from CB? Or will you go to the Abuki on the street to buy dollars with contributors' monies? So there's a bit of gray area there. For now, the windows collapsed, and then there's a new investment guidance with that. Wait, because the investment guidance is going to clear the air to sourcing dollars. Basically, to clean up that gray area, and then we know exactly. Or there's allowance for that. You can invest contributors in dollar assets or foreign currency denominated assets. So we have protect contributors' ones from exchange with risk.
All right. Thanks for that, Dami. Maybe just to add some more color on that, to say that yes, the devaluation is affecting everyone, right? And like you said, the pension funds as at today, they can access from official sources to invest offshore, right? But there have been engagements with the regulator, there have been engagements with the central bank, and we believe that very soon we should be able to invest a portion of our assets offshore. Like you said, the guidelines are being reviewed, there are some guidelines being reviewed. I believe very soon we should be able to do that, but we have to do it officially. We don't want to use contributors' monies and invest and buy funds in parallel markets. So we want to do it officially, and we're waiting for approvals to do that. So that's number one. Number two is that some of the exchanges in Nigeria are coming up with some products, and those products are called depository receipts, whereby we invest in Naira locally, but we have exposure to offshore assets. So those are some creative things that we're doing to be able to ensure that we hedge some of your assets. It hasn't started yet, but there are conversations ongoing. So the person that asked that question and other contributors, just chill. The industry will be able to do that quite soon. Thanks.
Thank you, Mr. Oguche.
I hope that helps.
Okay, so I have some other questions here on Zoom, a lot actually, but I'm going to take the first one. Please, how can PenOP resolve the issue of PFAs deliberately holding onto the contributions of customers that have ported to another PFA? This action is frustrating customers.
Okay, deliberately. Can you take the question again? Deliberately holding on?
Yes, so the person says, please, how can PenOP resolve the issue of PFAs deliberately holding on to their funds of customers that have ported from other PFAs? So maybe he hasn't been able to port from,
Great. Thanks for that question. So the transfer window started in 2020. So I think there have just been 8 quarters of transfers, and it's really new. So there are teething problems, and we'll admit there are teething problems. So the whole process of the transfer, the whole process of you being captured, is going through an overhaul at the moment. And after a while, these issues will fall by the wayside. So it's teething problems. But I think maybe one of the outcomes of this session is we need to be able to get a way by which the whole public can connect directly to PenCom, PenOP, so that we can get these complaints real time. But just to say generally, with the transfer window and with data recapture, it's going through an overhaul. It's going to go through an overhaul, and these issues hopefully will be limited. But before we close, I'm going to just connect with a couple of colleagues and to see how we can be able to get your complaints real time online, so that we can connect with you and we can resolve some specific issues. But generally, this is a teething problem with the window. We just started last quarter of 2020, and we believe that it's going to get better as we tweak one or two things here and there based on feedback we're getting.
Awesome. Okay, so another question also we have from Zoom is, why is pension a scam? And generally, this is like a general conception here in Nigeria, and it's something that hurts me because I work in this sector and I know how much we try to change this narrative. Yeah. But why? Everyone is asking, why is this still an issue? Okay,
let me see. Maybe I can get one of the panelists to answer. Someone is saying pension is a scam. What would you say to them when someone says pension is a scam? Let me throw this at Onyikosola Koka. Can you try and answer this? Someone is saying, why is pension a scam? What would you say to a Nigerian that says pension is a scam? Can you unmute Onyikosola and try to answer this? Okay, I'm not sure she's hearing me, but let me try and answer. So I think, there's a narrative that goes around. So I don't know who's asking this question. I don't know how old you are. So you can only say it's a scam if you haven't accessed it before. So if you are still working and you are still contributing, then why do you say it's a scam? You haven't retired yet, and you haven't accessed your pension. So for you, it's not a scam. Perhaps you are hearing from some other person's experience, right? And that person's experience is probably not from the CPS. And we'll get into the meat of it. The CPS is a contributory pension scheme that Nigeria now operates, right? But if you have maybe parents or older people who are in the previous scheme, and that previous scheme was not funded. So what happened was that before 2004, Nigerians will be working, especially if you worked with the federal government or state government, you'll be working, and when you retire, the government tells you, okay, your pension is X amount, every month come and collect. But guess what? Sometimes the government might not have money, which is why the whole system was overhauled into a contributory pension scheme, meaning that as you are working every month, some of your portion is being contributed. You know why that is so? So that when you retire, no one is going to tell you they don't have money because you're already contributing. You see that money. So it's not a scam if you haven't gone to collect the money and your PFA, which is your pension fund administrator, says there's no money, right? So you probably said it's a scam because of what you've heard from other people or what has happened in previous times. But in this season, there are very few people who've been contributing consistently and have retired and haven't gotten their pensions. There might be a few people in the public sector, and we'll probably get to that soon. But if you're in the private sector and you've been contributing and you've been getting your statements, you've been getting your alerts monthly, your PFA, you've been engaging your PFA, when you retire, you know, that money is going to be paid to you according to the benefits schedule, right? So pension is a scam, might be, is a myth, it's a perception, you know, but for you that you are saying pension is a scam, I want to ask you, have you retired yet and gone to your PFA and you haven't gotten your pensions? Then, you know, we can have a conversation around that. So there's a whole perception issue. And I don't know if anybody else, whether Inkosola is back or anybody else wants to take a stab at that from any of the panelists here.
Yeah, so any of the panelists can unmute and just answer. It's free for all. Let me get
Adetumbi. Adetumbi, you want to chip in? What would you say when someone says pension is a scam?
Pension is a scam. Yeah, first, I believe another thing is that person may have read that myopic analysis that was being shared on social media about how you contribute these amounts, that you invest at so time, that at the end of the day, they are making money. Really, pension is not a scam, like you said, if you have not accessed it. And I just want to say that it is very regulated. So your funds are safe. Everything about it is safe. Nobody can pilfer. No PSA can pilfer with your fund. That is why you have a pension fund custodian and you have a pension fund administrator. So the assets of the PFA are kept by the custodian. So there is always maker checker, and then the system is very regulated. And you have trustworthy. PenOP is sacrosanct. PenOP doesn't joke with. That's why you see sanctions here and there. Nobody can do anything with your funds. So pension is not a scam. Thank you.
Do you know the funny thing? When the person asked the question, there was a sort of disclaimer there. I don't know much about pensions, but this is what I hear. Yeah. So I'm sure the person hasn't experienced it, but that's the general narrative that the person has heard so much about pension.
It's a perception that we need to do a lot, and which is why we're having this engagement, this live engagement. It's not a scam.
Yeah. Okay, so we have another question, also from Zoom. Apologies, I'll go to the other platforms as soon as I get some of this out. So do PFAs appoint external managers to manage funds, or are there internal portfolio managers within the PFAs?
Okay, great. I don't know whether Dami, did you hear that and do you want to take that? Do PFAs appoint external managers to manage their funds? Dami, you want to take that?
Okay, can you hear me?
Yes.
Okay, so no, we do not outsource investment management or portfolio management funds. Okay, each PFA has a robust and dedicated investment team, also very well represented by investment supervision department, PenOP. PenOP, of course, is the regulator of national and national commission. So PFA has a dedicated get vetted first place by PenOP to be sure that they have the complete or relevant experience to do funds management to manage contributors' funds. So we do not outsource investment funds. We invest it ourselves. Run every investment by the PenOP investment function. Most of it is invested in very are very credit ratios. Your checks. The money is very much secure about that. Yes.
Okay.
Okay.
Thanks, Dami. I think I was struggling to hear you. I don't know whether it was me or whether it was just your pitch. So, but just check from your end. But just to re-echo what Dami was saying, PFAs in Nigeria don't outsource their investments to other fund managers. In other countries, I know that the way some of the pension funds are modeled in other countries, they outsource to other fund managers. But in Nigeria, the policy and the regulation and the act says that the pension fund administrators, the PFA, must have in-house analysts who manage the fund, portfolio managers, and they make the decisions on behalf of the fund. So they do not outsource in Nigeria. I know other countries might do that, but currently we don't. I hope that helps to answer your question, the person that asked. Thank you.
Awesome. Thank you so much for that. So I'm going to go straight to Instagram. I have a question there. The question is, please, can I have access to my pension when I resign and want to establish myself? Okay.
It's a type of the other question we asked, which was answered before. So if you are working today and you resign, the act says that after 4 months, you can have access to 25% of your pension. So if you look today and your RSA balance, whatever it is, when you resign, after 4 months, you can have access to 25%. But the PFA will have to do your checks to ensure that you've truly resigned, to ensure that you've not received your pensions, right? And then you can have access to it. I mean, it's really just like an unemployment benefit. You could get a job later, that's fine, but you might not get a job, but you want to start a business. So you could use that money as a startup capital, but it's only if you resign. So we need to see a resignation letter, you know, your firm must have confirmed and things like that. So they'll do their checks just to be sure you're not gaming the system, because we've seen some people trying to get the system. But the thing is, if you resign 4 months after, you can have access to a portion, 25% of your pensions. I hope that answers your question.
Awesome. Thank you, Mr. Oguche. So before we just move on, I'd like you to explain to us the difference between the CPS and the defined benefit scheme, so that it helps with the pension is a scam narrative.
Yeah, thanks. So I think, let me see, Bolaji. Bolaji, do you want to go the difference between the CPS and the defined benefit scheme? I don't know if you are available to answer.
Also, before our panelists, please, as you come on air to speak, kindly put on your camera.
They want to see your face.
Yes, we love to see your face.
Want to see your face. So if you can, Bolaji, if you want me to give you time, maybe you answer the next question, and if you're not ready. Or you want to go for it, Bolaji? Okay, Bolaji, I can't hear you. I'll take that as you want me to give you time. So let me just say, well, like I said, the contributory pension scheme is really you, the contributor, are the driving seat of your pensions. Hello, is that Bolaji?
Yes. You're a bit low, so if we could just increase your volume. Yes.
Okay, I was going to add to the question on 25%, two things. To be able to have access to 25%, you must be less than 50 years old. For people that want to have access to that, you must also bear in mind that you can only have access to 25% once in a lifetime. What this means is that you cannot stop working, go to your PFA, take 25%, another job, exit at an age less than 50 and think you can have access to another 25%. It doesn't work that way. That's what I need to add to it.
Okay. Do you want to take a stab at the question of the difference between the CPS and the defined benefit, the difference between the contributory pension scheme and the defined benefit scheme?
Okay, for that, most of the old schemes were not fully funded. Therefore, on the retirement, there were no ready funds to pay the pensioners. The serious difference between this and the new scheme is that this new scheme is fully funded. monies that are being contributed into individual RSAs, and when these people retire, when they exit from employment, they can have access to the benefits almost immediately.
Great. Thanks, Bolaji. So just to add, your RSA is your retirement savings account. So just the way you have a current account with your bank, and it's your account in your name. So you have a retirement savings account in your own name. So as you are contributing your pensions every month, so every month a portion of your salary is deducted. The law says 8%, and your employer adds 10%. So 18% of your salaries every month goes into your RSA every month, and it's funded. So when you retire, immediately you retire, that money is there for you to access based on the benefits template or based on the regulation, right? Unlike the defined benefit scheme of previous years, whereby it wasn't funded and it was based on if there's a budget for it with your company or with the government, whichever it may be. So this scheme, like I said, Nigeria changed to this scheme in 2004, and it's recorded a number of successes, and it's fully funded. That's a big difference, fully funded.
So would you just say in general that people are still of the opinion that we're still running the old defined benefit scheme rather than the CPS system?
Yes, I agree with you. So many people still think that that's the case, which is why the narrative of pension is a scam. That's number one. Number two is that bad news travels fast.
Definitely.
So people don't hear of the 95% of people who get paid on time, and they might hear of the 1% that doesn't pay on time, and then it becomes a story. So bad news travels fast. And I think the third thing I'd say is, the Pension Act, covers federal government employees and private sector employees, but it doesn't cover the states. So Nigeria's constitution, the states have control over pension, so they can decide to jump on the scheme or not. So many of the people that you hear who retire and don't have access to their pensions are actually state government workers who are not covered by the law and the CPS. So that's one thing that people need to know. So when they hear someone has been queuing or died in this time and age we are, it's probably a state government worker that is not covered under the CPS scheme.
Thank you for sharing that. So another question from Zoom is, what is the maximum of the pension funds that can be invested offshore? I'm thinking this is offshore investment.
Yeah. So currently, we do not have guidelines for investment offshore. So all pension funds by the PFAs are invested onshore. So currently, that hasn't started yet. So I said the industry hopes to start that quite soon. There have been engagements with the central bank, with the PenOP, but that hasn't happened yet. So as at today, there is no portion that they can invest offshore yet. So just hold, that might come soon, but not now.
Okay, awesome. So let me go to Facebook. I have a question here. Please, we're in hardship. When did we get up? I'm just going to rephrase this. Please, we're in hardship. How can I get my pension, please? And how is pension operated?
Yeah, so you are in hardship. Sorry about that. I looked at the economic reports, and inflation rate is high. We know what's happening with the exchange rate. So there's general, hardship in the country. If you've lost your job, right, because of that, like we said, you can access a portion of your pension, and that will help you to cushion the hardship. That's a good thing about the pension. But apart from that, the way it works is that when you are working, right, you can contribute a portion of your salary mandatorily, right, and every month it goes to your pension fund administrator. What should happen is that they will grow that money for you. And if right now you are listening on anywhere, I want you to take a look at your statements. If you don't have your statements, ask your PFA. Go on their website. They have their numbers there. They have their apps there. Ask them to send you your statement, and you will see something interesting in your statement. And don't just ask for the statement. Look at it. You will see that contribution, how much you have contributed, and how much your pension has grown. So over the years, if you've been contributing since 2006, when the first contribution started, you will see that what your pension is probably more than double what you've been contributing. So what that means is that the PFAs have grown your money, and that's the way it's meant to work. So when you are working, you put your money away every month, and then the PFAs, by virtue of what they do, the investment activity which Dami spoke about, they grow your fund so that when you retire, you have access to a larger amount of money than you will have if you are just keeping that money in your savings account. So that's how it works. But in terms of hardship, the Act makes provision for if you've lost your job for a bit, you can get a portion of that. I hope that helps, and I hope that helps to explain how the pension scheme works.
Thank you for that, Mr. Oguche. Also on Facebook, I'm believing this person is asking, is my pension being invested? And if, do I get returns on my investments, on my pension investments?
Yes, your pensions.
Yes.
So I think it's the same answer I'll give the last time. Yes, your pensions are being invested. And they are invested based on guidelines issued by the regulator. And all the pension funds have investment teams, and that's what they do every day. When they wake up, they are checking the markets, whether it's the equity market, whether it's the bond market, whether it's the money market. They're checking out what's the best thing for this RSA holder, what's the best thing for the pension fund. So yes, your pensions are being invested, and you'll see the returns on your pension. So if you take your statements again, like I said, you will see how much you've contributed, and you'll see how much your pension fund has made. So it's there and it's in plain sight. You can also go to the pension website, your PFA's website, to check the returns from your PFA. But what's going to happen is that from next month, PenOP is going to be publishing return characteristics for all the PFA, so you can see over time how much your pension funds are gaining. So yes, it's been invested in various asset classes, and we probably will go into that in the course of this day. And your money is growing. It's not just stagnant, it's growing, and it has grown quite a bit over the last 19 years that the scheme has started.
Awesome. So just based off what Mr. Oguche just said, to see this information, kindly follow or go check our website, www.penop.com.ng. Be sure to get all the latest news on pension there. So I have a question from Philip from Daily Trust. It said, is there also a planned withdrawal system for pension contributors? Okay.
So planned withdrawal system, I would assume that is when you retire. What's the process? So you hear program withdrawal, you hear annuity. So how is the planned withdrawal system? And let me see, I don't know if Onyinko is ready to answer. So Onyinko, what is the planned withdrawal system for pensions in Nigeria? When you retire, how are benefits paid? I don't know if you are in a position to answer, Onyinko. I know Onyinko was striding. Let me throw this at Adetunbi. Adetunbi, do you mind taking a stab at this?
All right. So to get your benefits, when you retire, there are some documentations that you need to do, and what is done in summary when you fill those forms and do some documentations, and give to your PFA. Your PFA puts them together and sends it to National Pension Commission for approval. Your age and your date of retirement matter. We've had cases of people that say your PFA only give exactly 25% as lump sum, and then they have monthly withdrawals. Some people say they take more than that as lump sum. So what makes it different is your age at retirement and the period, number of years you used. So it affects, and what you contribute and your salary, all those things affect what you will get as a lump sum. So once that is approved, you'll be paid your lump sum, and you will have a monthly program withdrawal. And if you want quarterly, you will request it may be quarterly. So you have monthly and you have quarterly. And as you are being paid monthly, your balances still grow. So it's not that you will just lose funds and once you are depleted, then there will be no money. No, your balances grow. And there are some statistical calculations that the Commission has put in place that the system generates, so we'll know. So any case of maybe depletion or anything is provided for in the pension guarantee. So you will be paid until your last days or your last day. So you will always have the monthly stipends coming in. So that's just an overview. The intricacies is when you want to do it. But basically, you route it through your PFA. They will ask for a few things, and you fill and you submit, and the process will be concluded. Thank you. Okay,
I wanted to say that. So, is it possible that two of us can retire at the same time, work in different organizations, but we get different amounts? Because some people are here, they will check another person to say, oh, you are getting this amount, and then this is a scam. So, why is that different?
Yes, like I said, it actually depends on the grade you left, your salary structure, and
your age.
Even if you join the same day and retire at the same time,
yes,
it still has to do with your age because you are not on the same day. So your statutory requirements for the statistical calculation will vary when it comes to that area. That's why you have a slight difference in what you collect. And then because you have contributed too, some people rose through the ranks. It depends on the grade and grade at retirement too, and the number of years spent. So you can be 60, or you can be 60, you retire, or you only spent maybe 20 years. Some people spend 35 years, whole years. So it all depends. So that's why you have some disparity. Thank you.
Okay, great. All right, Jumoke.
Okay, so we have the second part of Philip's question. He said there has been complaints about the 25% RSA balance for mortgages, as many holders say it is too small to access their mortgage. Is there any conversations around this review?
Yeah, so I'll answer that question and I'll throw some things out. I will say pensions generally is money that you should use in retirement, right? But, the thinking was, why should I wait for retirement? Why don't I use a portion of that to own my home now? Which is good, and which is the Act tries to bring that into fruition, and PenCom has got some guidelines around that, and it's great. So what it is that you can use 25% of your RSA balance as a down payment for a mortgage to get your house. So that's in place now, and some people have accessed it, right? Again, there might be some teething problems, but some people have already accessed it, and we'll showcase over the next coming months and weeks some of these people who have access and ask them question how they did it, and it's a straight through process. So that's the first thing I'll say. So some people are now saying the money is too small, and what I will say is that the fallback on your NHF, is not just your pensions that are being contributed every month. You also have NHF deductions, right? So what someone said one time, he says, if your road is bad, people say let's go to pensions. If there's no power, let's go to pensions. So pensions is one aspect of the economy. There are various other aspects which we need to fall back on. So pensions is not meant to solve all your problems, right? So let's also hold some other agencies or some other bodies accountable, like your NHF contributions. What's happening to that? So that's what I'd say. But what I will say is that from what we have done is to say your pensions that you've been contributing, after a while, if you've been contributing for 60 months, it doesn't have to be cumulative, but 60 months in total, you can access a portion of your pension, use that portion, 25%, and you can also do a joint mortgage, you and your spouse. Both of you take 25% and put that money as a down payment for a mortgage for your own home, residential. It's not commercial, residential home. So that's working. But for those that say we want to do more, I'd say let's work with this first.
For me here,
Yeah.
the most important thing is that you can actually see that the system is working.
Yeah.
And it's very important for people to know this. I mean, one of the main reasons why we decided to have this session is to let people know that pension isn't exactly here for you to say, we have a surgery, we need the money now. It's, what am I going to use when I'm 60, when I'm 70? When my children are no longer with me, am I going to keep saying, Bolaji, I'm not collecting allowance this month?
Send me,
yes, send me.
children to send you.
Yes, that we don't want that.
You want dignity in retirement.
Exactly, exactly. And that's why the system is here. So let's move on with the next question from Zoom. It says, please, what can RSA holders who resigned some years back without disengagement letter or acceptance of resignation letter, and the firm is no longer functioning, and the RSA holder wants to access benefits, how can it be treated for the client's issues?
Okay. Yes. Let me see who can answer this.
Okay. I'll take that, okay?
Okay, go ahead. Go ahead.
Take that.
Okay. So it is the client's obligation to provide the necessary documents which are required to have access to the funds in the retirement saving accounts. In the case where an organization has shut down, the expectation is that there will be a certificate of closure. If there is none, my expectation is that the PFA will work around, because you cannot tell a client that you can't have access to your funds because your company is shut down. Okay? So you could try things like asking the client to provide an affidavit stating the closure of the organization, and of course the affidavit will also state the date of exit. Okay. So with that kind of document in place, my belief is that if the PFA wishes to PenOP for an approval, they will get one and be able to pay the client.
Thank you, Bala. Thank you so much.
Thanks, Balaji.
Thank you. I didn't even know I was using your name as an example.
Yes, I get that.
Thank you so much for answering that question. So I have another question here.
Okay.
So I'm even going to say yes before I read the question. When the dollar savings opportunity is available, will there be awareness?
Yes, of course there will be. There will be a great awareness. We'll let RSA holders that are contributing and those that are not contributing to know about it, definitely. So you will definitely be aware. Don't worry about that. Anjuboke, I don't know whether people that are registered, we can have them on our database and send them regular updates or something of that sort. So we'll work around that.
Yeah, we'll definitely do that. Okay, so we have a question, and I don't know, I'm already seeing jackpot somewhere, but let me read this. What happens to the pension of people who migrate from country? So let's say they've jackpot.
Yes.
Especially considering they won't continue making contributions to the scheme. So that's the first part of the question. Okay. Secondly, also, if they want to continue, is it possible to do it from another country?
Great. Very interesting question. Let me have Balaji again take a stab at this. Balaji, do you want to take a stab at this? So the person has jackpot. How do they get access to their pensions, number one, or if they want to continue contributing?
Okay, yes, irrespective of your location, you can have access to your account, provided you submit the necessary requirements. Okay, so that is that. Then what's the other part of the question now?
Contribution, if people can contribute after they've
jackpot.
If they've jackpot, if they can contribute after they've migrated.
You can actually under the cross-border arrangements. You can.
Yes. So yes, you can under the cross-border arrangement. Again, we are working to modify that, and you will also hear about that, whereby people who have migrated can continue contributing to their pensions with ease. We are working to modify those, and you'll hear about that. But like she says, if you've resigned, you're less than 50, you can have a 25% of your pensions as long as your documentation and everything is okay. And then if you've migrated and you're above 60 retirement age, you can also have access. Just engage your PFA with the necessary documentation, and you will definitely have access to your, because it's your pensions, and there are times and ways by which you can access it, right? Whether in Nigeria or outside Nigeria.
Awesome. So this next question, I like it because before I joined PenOP, it was a question on my mind, right? Okay. So the question says, what are the penalties for defaulting private sector employers?
Yeah.
How are these penalties enforced? How can employees seek redress? They're looking for solutions, because we see many employers who do not remit their employees' pensions on a monthly basis.
Yeah.
It's not supposed to be every 6 months. It's not supposed to be every 1 year. It's supposed to be monthly.
Yeah.
Because when it's going in monthly, you're getting interest.
Yeah.
So if this isn't happening, how can they? What do we do?
Yeah.
Yes.
Okay. I mean, that's a very good question, and I think. Let me have Adetunbi take a stab at this. I'll come back to add the color to something, but let me have Adetunbi take a stab at this. Adetunbi, you want to take a stab?
The industry, like I said, it's well regulated, very regulated. First, for defaulting employers, I would start from the PFA perspective. PenCom, a monthly report. A report goes to PenCom every month now, and I've been monitoring private sector employers that have stopped funding and are defaulting. Another strategy that PenCom has put in place is for recovery agents. So the recovery agents enforce, they go to those private sector employers, and there's a penalty paid. So one of the things that the penalty does is to actually pay the penalty back into the fund. So they will pay what they are supposed to remit normally, and they'll still pay another penalty into the fund. So it's always a win-win situation for the employee. However, we know that a lot of people that are still defaulting, and the regulator is really working on it. Thank you.
Great. So that's comforting to know that if your employer has been defaulting, there's a penalty. I think it's 2% per month or so. It's in the regulation, and they will now remit how much they didn't remit plus the penalty, and that penalty goes to you. The penalty goes into your accounts. The interest goes into your account. And PenCom has what we call recovery agents. So they work with agents who go to these companies that default every now and again to engage them first, and if they don't, they can actually take them to court. There are some of them that we know are in court. But I think there probably has to be a whistleblowing mechanism, or there is a whistleblowing mechanism. And I'll see if before this session ends, we can get that to you. There's a whistleblowing mechanism, I believe it's on PenCom's website, where you can report anonymously a company, and then they'll get the agents to come to the company and help to recover that money. There's a whistleblowing mechanism. But what I will say, personally, as a brother or a sister, what I would advise typically is, if you are in a company and they are not paying pensions, look for a way to leave that company. That's the honest truth, because it just means that the company, number one, is not focused on the employee's future. They are not focused on your well-being, and they're not looking to grow. That's the truth. They're not looking to grow beyond where they are. They just want to be a small company, or they just want to be an unethical company. Because if you're looking to grow, if you want to do any major government contract, if you want to raise money from the capital market, you need your pension compliance certificate, right? So if you want to export, if you want to go internationally. So if it's a company that's looking to grow and be large and be in different countries, then they will prioritize these things, right? So I would advise you to, if it's one-off, fine. But if it's consistently 2-3 years haven't paid your pensions, I'd advise you to start looking for another company. But then there's a whistleblowing mechanism within PenCom that you can report them to. So that's what I'll say. That's my advice.
Okay. Leave the company. But please, before you leave, make sure you found something else. Don't say it's PenOP, I beg. Okay, so I have a question here from Oluwakayode from LinkedIn. It said, what if there is a failed investment on the part of the PFA? Who bears the loss?
Failed investment on behalf of the PFA, who bears the loss? I mean, you take this. Do you bear the loss, Dami? What if there's a failed investment on behalf of the PFA? Who bears the loss? Can you take this question?
Trading losses when it comes to the attention of PenOP, it's usually put on the company. Okay, so the company will bear the loss, right?
As the PFA will bear the loss, not the contributor.
Not contributor.
Okay, so the company will bear the loss, not the contributor. So trading losses.
It's a very industry context.
Okay.
Economies on every other thing. Everything. So we will try to be very moderate in our risk taking.
Okay.
Okay. Everything issue or every paper invested has to be investment grade rated. Okay. In fact,
Hi, Dami. We can't hear you.
Okay, he went on mute, so maybe he's having challenges. But what he was saying was that trading losses are not borne by the contributor. So the PFA as a company bears that loss. And he was saying PenOP is very hard on that. And like Adetunbi and many people said, the industry is well regulated, probably one of the most regulated in Nigeria, right? So PenOP is on the back of the PFAs every other day, just trying to monitor this thing. So the trading loss is borne by the PFA, not the contributor. Dami, I think you're back on. You want to continue from where you stopped?
Yeah, I was saying most everything we invest in has to be investment grade rated. In fact, 2 ratings is what the regulation is. Maybe there's a corporate CP, a corporate bond, and all of that. You have to do extra due diligence, ensure that it's double rated. I'm talking about credit rating now, investment grade rating.
Yeah.
Okay, so all of that in our investment guidelines follow to the letter.
Great. Okay. Thanks for that, Dami. So Dami is saying the pension funds prioritize safety, a lot of due diligence to ensure that the funds are kept safe. So if there's a trading loss, the company bears it, not the contributor.
Well, in English, thank God though. So this question is pretty interesting. The person asks, why can't I just get everything when I retire instead of getting a stipend for my contribution? I can start a business with 2 million, no matter how small it is, instead of getting 25,000 or 30,000 every month. It favors only those with huge millions in their pension accounts.
Let me see who's going to help me answer this. I have some thoughts. If Onyinko is available, she can answer this. Someone is asking, why don't I just get everything when I retire? Why do I have to get it on a monthly basis or quarterly basis? With my lump sum, I can start a business. Let me yield the floor to Adetunbi. You want to speak to this, and then Bolaji, maybe you can also chip in 1 or 2 things. But Adetunbi, you want to speak to this?
First, I will just. It's not that one is starting from the negative. I had 1 or 2 or 3 people that have experienced total loss from their retirement benefits. Left a very good company, oil servicing, and the person was paid like, is it 60 million or 70 million? And that's all before the pension scheme, before the CPF scheme, and invested, got a few advices and advice and invested in a business, and he lost everything. Now, that is very preventable if you are on the CPS. One of the reasons why you will not get everything is we are not very good risk takers and we are not very good managers. You are not an investment expert. So the giving you in statements, it keeps you alive. The retirement for the pension is to keep you going. It's not something for you to just collect and go. It's actually something that will keep you functional even till death comes calling. I don't always want to say to you that till death comes calling. So that is the essence of pension. It is not gratuity, it's not something given. It's something that should sustain you. That's the reason you can't get all at a time. If you get all, you are prone to different things. Correct. When you even look at the volatility of the economy, you can't even so it is good you leave your money with experts that will make your fund grow. I was explaining to someone, I said, you contributed hypothetically 10,000 and you have 700,000 as what you have now. Your fund has grown astronomically. So, and as that stipend is being given to you, your fund is still growing. So it is still being invested. It's not that investment has stopped on your funds. So I would say, to live long or live longer, it is better if you are paid stipends. It is not for those that have a lot of money in their RSA. No, it is to guide you and make you function, even while you have stopped functioning as inputs. Thank you.
Thanks, that is be quite good insights. Bolaji, do you want to chip in on this point?
Okay, yes. Thank you, Adetunde. I'll just add that from two angles, it depends on the age of the client. If you're less than 50, you've already said you only have access to 25%. So irrespective of how much you have in your account, you can have access to just 25%. Then if you are above 50, you are 50 and above, it depends on how much you have in your account. Once upon a time, the scheme allows you to withdraw all you have in your account if you are 50 and above and you have 550,000. We call it 10 block payments. However, what is applicable now is this. If you have more than 550,000, the PFA does a calculation using the payment template issued by the PenOP, by the National Pension Commission, PenOP, to calculate what the person is entitled to get in terms of lump sum and monthly pension. Once that calculation is done, and the client has 1/3 of the national limit, which is 10,000 naira, such client can have access to the entire fund. So we are talking of people being able to withdraw as much as over 1 million, sometimes 1.2. So it depends on what is being computed. It depends on the parameters, which are your final salary, your age, your RSA allowance. Those are things that PFA will consider. Thank you.
Thanks, Balaji. Great insights. I don't know if Onyinko can speak now. Okay, I think she's not available, but let me give my own thoughts again. Man to man. Let me talk. So let's look at this holistically, right? And let's not look at this sentimental. The person that asked the question, you are not the only one. Many people ask this question. It's my money, why don't you give me everything? First thing I said, you need to realize that whatever you have in your RSA balance, your retirement savings account now, is a contribution, is a combination of what you've contributed and what the PFA has grown for you. So if you've been contributing since 2006, chances are what is in your RSA, meaning that it has doubled. The PFA has, by its activity, helped to double the money, right? That's number one. Number two is, if you are not being compelled to contribute every month, you wouldn't have gotten that lump sum anyway. That's the second bit. But the third bit I would say is that if you look at it from a country national point of view, so like he said, let's give an example. Maybe your RSA balance is 15 million and you get the whole 15 million. Yes, everybody believes that they can do a business and they will make money. Everybody believes that, right? But what if in the next 1 year, 2 years, 3 years, that money goes? Then what happens to you? You now become a liability on society. The society now has to find out, how do we fund you? And don't forget, you retired at 60, everybody wants to live till 90. So maybe you have 30 years. So what happens to you in those years? You're going to be a strain on yourself, society, right? So what it is that, we'll give you one lump sum and then you'll begin to get some portion every month. However, if you know that you want to have a lump sum when you retire, why don't you be saving 10% of your money every month, or 5% or 3%? So when 8% is taken, tell your PFA, okay, let me take 3%, or you'll be having that savings yourself. So don't forget that you can still save outside of the pension. So if you wanted to have a lump sum when you retire, why don't you start now, right? And I'm going to ask someone before we finish, we talk about voluntary contributions. Why don't you start now? So pension is only one portion of savings. It's not the only way of saving. So if you want to have a lump sum to start a business when you retire, you can start planning now outside of your pensions, right? So pensions is one way of getting that money, not the only way. So if you want to do something and do a business, why don't you begin to save towards that, or take a loan or something, not with your pensions?
Thank you so much, Mr. Oguche. We have a lot of questions coming in.
Okay.
So let me just take this question before I take another question that is a little bit off what we've been talking about here.
Okay.
So the person said, I noticed that it's quite difficult to continue voluntary contribution after disengagement from employment, most especially for people who are now self-employed or working outside the pension provider's immediate jurisdiction.
Yes, you're very correct. It's something about micro pensions, which we are trying to work around. If you've been working, right, and you've resigned or you've left your job and you're not doing a hustle, it's not a side hustle, it's not your main hustle. Can you continue contributing? So currently you can't, right, but we are working around this because we've gotten this feedback from people to say people who are working before, they need to be able to contribute through a micro pension scheme. Let me have Adetunbi just also chip in, his own thoughts, because I know it's something that has come up a number of times. We're working around that. Adetunbi?
I didn't quite get that. Are you talking about pension?
So someone has been contributing voluntary contributions when he was working, but then he now left his job and he's now doing business and he's finding it difficult to continue contributions. I was saying that we've gotten that feedback and we're trying to incorporate it under the micro pension scheme. I just wanted to get your own take based on your engagement. I've left my job, I can't continue contributing.
Okay. Yes. For that line, for talking of the micro pension scheme, the industry is also looking at those unbanked and those that are artisans that are doing their self-employed. It's clearly stated in the Act. So the MPP scheme, though it's been on since 2019, the industry is looking at how to even harness it better, and it will assist, because if you are doing a personal business and you still want to continue, and the micro pension scheme is actually for you. You can be under a group or a union, and you'll be able to register and contributing. I hope I got the question right, actually.
Yes, you added some color. Yes, you did. You did.
Okay. Thank you.
Okay. So many questions. Definitely, we have to have another one quite soon, but keep them coming.
Yes, please. So I wanted us to talk a little bit about micropension before we move on, because there are a few questions about it, just because not everyone is in the CPS system. Not everyone is
formal.
Yes. A lot of people are hairdressers, influencers. I mean, that's the new oil. Influencing. So let's talk a little bit about micropension.
Okay.
What is it? Why was it created? And who is it for?
Yeah, thanks. A very interesting question. So it was created for people who are not in the formal sector, right? So initially, the pensions, when it was created, it was typically for people who work in private sector and government, who their employer remits a portion of their salary. And if you see the way the act was first muted, it was that your employer will remit 10% of your salary and you will remit 8%. It was for those informal employment. But of course, we know that informal employment has grown. And with the young generation, there are many VJs, DJs, bloggers, event planners, who are doing well and who have not been able to save for their future, pensions for themselves. So that's how the micro pension scheme came about. Also, those at the bottom of the pyramid, maybe a vulcanizer, a tomato seller, a hairdresser, or just in informal employment. So how should these people save for their retirement? That's how the micro pension scheme came about. So we like to call it a self-sponsored pension plan. Self-sponsored pension plan, whereby you yourself, you determine how much you put in your pensions account, how often. So it's not that your employer, you are your employer because you work for yourself. So you have to think about your future. So okay, if I make 500K, for instance, as an MC in a gig, and I have 4 gigs a month, I make 2 million. So maybe I should put 10%, so 200K, I give my PFA. I open a micro pensions account, so you are your employer. Maybe next month you don't have any gig, you don't have to put any money. Then December is coming, they book you 7 times, you make 3 million. You say, okay, December, let me use 15% of how much I make. Or the next month, let me use 5%. So you determine how much you put, how frequent you put in your pensions account. And it's your choice. But you need to realize that it's for your future. And it's the same way the contributory pension scheme is invested. So they invest it for you. So when you put the money, it grows and they'll send you your account. So you'll see that it's growing and it benefits from the compounding effect. Compounding means that when you get interest this year, they will use your money and the interest and it will get double interest next year. So it keeps on growing. So it's something we're encouraging many people to jump on. Contact your PFA, ask them you want to open a micro pension account. It's not just, pension is not just for people, formal employment. So you can open your micro pensions account. And the good thing about this is that there's a portion that you can take, there's a contingent portion. So 40% of how much you contribute, you can withdraw it at any time. It's yours, you don't have to wait until when you retire. You can withdraw it at any time. So it's flexible, unlike the other one. This is flexible. So we're encouraging many people to get on the micro pension track. Also go to our website here, you can get started or just contact any of the PFAs, the pension fund administrators, to get on this track.
Thank you so much, Mr. Oguche. And we have a video to show you guys, just a few steps on enrolling for micro pension. So I have an advice for you, right? We're going into December, right? And this is the time of dirty December, meaning that there are a lot of DJs that are going to be paid. As Mr. Oguche said, before you spend all this money, put a little bit of this portion into your savings. That's your micro pension savings account. So to help with this, we have a video to show you. Please enjoy.
After the video, we'll come back to your questions.
Yes.
All right.
Yes.
So just watch the video.
Is quite easy and straightforward. To sign up for a micro pension plan, these are the steps. Step 1. Select a pension fund administrator of your choice, your agent. Step 2. Visit your selected pension fund administrator, PFA, to register on their online platform or via their agent. Step 3. Get a PIN. Step 4. Start contributing flexibly and conveniently. When going to register for a micro pension plan, remember to have your 1. National identification number and 2. A means of identification, which can be any of the following: permanent voter's card, driver's license or international passport. When you register for a micro pension, you also get to enjoy additional benefits like free healthcare insurance. So visit the pension fund administrator of your choice or their agent to sign up today. This message is brought to you by the National Pension Commission, PenOP, and the Pension Fund Operators Association of Nigeria, PenOP. Getting a micro pension plan is quite easy and straightforward. To sign up for a micro pension plan, these are the steps. Step 1. Select a pension fund administrator of your choice, their agent. Step 2. Visit your selected pension fund administrator, PFA, to register or register on their online platform or via their agent. Step 3. Get a PIN. Step 4. Start contributing flexibly and conveniently. When going to register for a micro pension plan, remember to have your 1. National identification number and 2. The means of identification, which can be any of the following: permanent voter's card, driver's license or international passport. When we register for a micro pension, we also get to enjoy additional benefits like free healthcare insurance. So visit the pension fund administrator of your choice or their agent to sign up today. This message is brought to you by the National Pension Commission, PenOP, and the Pension Fund Operators Association of Nigeria, PenOP. Getting a micro pension plan is quite easy and straightforward. To sign up for a micro pension plan, these are the steps. Step 1. Select a pension fund administrator of your choice, their agent. Step 2. Visit your selected pension fund administrator, PFA, to register or register on their online platform or via their agent. Step 3. Get a PIN. Step 4. Start contributing flexibly and conveniently. When going to register for a micro pension plan, remember to have your 1. National identification number and 2. The means of identification, which can be any of the following: permanent voter's card, driver's license or international passport. When we register for a micro pension, we also get to enjoy additional benefits like free healthcare insurance. So visit the pension fund administrator of your choice or their agent to sign up today. This message is brought to you by the National Pension Commission, PenOP, and the Pension Fund Operators Association of Nigeria, PenOP.
Thank you very much. We had to play that 3 times because you know how short our attention span can be, so that it keeps ringing in our heads. Thank you so much for that. So I have one question before we
I wanted to. There are so many questions.
A lot.
Maybe we'll try and take some and answer them on our page. But on Zoom, somebody will be answering some of your questions. We'll get someone to answer some of your questions one to one. So on Zoom, but we're trying to do that. Those on Zoom, we're trying to do that. But so let's get back into the questions. We were meant to end by 11:30, but we will have to take this further because so many questions. So let's see how much more we can take.
Okay. So I know we've spoken a little bit about mortgage, but I would like for you to explain more about it based on the question someone asked. Can you please explain the 25% equity contribution for mortgage? Let's know how it applies and how long it takes.
Okay. Let me see one of my panelists to help me. Onyinkosola Koka, I don't know if you are available to answer this person. They're saying they want an explanation of the 25% for mortgage.
Okay, I'm here. Can you hear me? Good morning.
Good morning, we can hear you.
Can you hear me?
Yes, we can hear you. Go for it.
Okay, thank you. For the 25% mortgage, so the thing is, for everybody who's on the CPS and who has been contributing for 60 months, at least 60 months, that 60 months is approximately 5 years, that contribution history of 5 years, you are eligible to apply for a value no more than 25% of your current RSA as part of the equity for the property. So what you do essentially is if you find a property, then look for a PMI, a mortgage institution, who you have to come through the PMI. So you go and apply for a mortgage with that institution, and then they come, you fulfill their own requirements. Then go to your PFA as well. You apply at your PFA and following your engagement. So you have an offer for a property, and then take it to the mortgage lender. The mortgage lender gives you the terms and conditions, inclusive part of that, you're linked to your from your RSA value. Now, the thing is, so for sake of argument, let's say you're buying a house that's 5 million naira, and the PMI is flexible in terms of how much equity you can bring and how much they're willing to loan you. Now, if the property you want to buy is 5 million naira, unfortunately you have 4 million naira in your RSA at that time. Let's say that's your total RSA balance. You can access up to 1 million naira, that's 25% of that 4 million naira in your RSA to add to the 5 million naira, to the value the PMI wants to give you. Remember I said the house property is 5 million naira. So if you're bringing 1 million from your RSA, that means the loan value they're giving you is probably 4 million naira. So 4 million plus your own 1 million makes 5 million. That's essentially what it is. So you can actually take out of your RSA. Now, the process with your PMI, the search, confirmation of title and all of that, I won't speak to how long that will take depending on the different processes. But if all your documentation is clean and clear, so when I say documentation, the property offer, there's an indemnity you have to sign. There's an indemnity the mortgage lender is also supposed to sign. Once that is there, and all the other documents you require, so like your property, obviously there has to be a property offer letter from the owner of the property or the developer who is selling to you. You have all of that, and all the funds all are in order. So when I mean in order, it's not like there is any additional cost somewhere outside of that 5 million, that will then bump up the values. Once everything is in order and it's that 5 million, you go to your PFE, so the PMI will send your document to the PFE of your choice, the registered, who will then file the application to the National Pension Commission, and then they will process it. It may be a bit tough to give you a timeline, but I can say in recent times things have improved drastically at Commission, and so maximum 2 to 4 weeks, if I can say that, you should be able to access your funds. That is, it goes to the Commission, they approve at the Commission and send it back to your PFE. Now, when they send it back to your PFE, that's the approval, your mortgage lender has to provide some document. That's a confirmation that the property is still available. In the timeline, the confirmation of property is still available. Then the fact that they are ready to accept the funds from the PFA and disburse to the property owner. So once they have that, and then there's insurance. Now that insurance is critical. It's supposed to cover a default, that's on the loan, as well as a replacement of the property. So you're not just getting a property that's not insured. You're getting a property, you must get an insurance on that property. So if anything goes wrong, you are insured. Your funds are insured that you will get a replacement of sort at that time. So those 3 documents, once that is provided to your PFA disburses the funds to the mortgage lender, and you're good to go. They pay the developer.
Great. Thanks, Onyeko. So, great, thanks. So, essentially about 2 to 4 weeks if everything is okay. So, you were mentioning PMI. I just wanted to say that was a primary mortgage institution, right? So, just for people that you know it's a primary mortgage institution.
Yes, I do apologize.
No problem. Thanks for the explainer. So, in summary, you need to ensure you have the property and you have the mortgage lender, and then the PFA will come with their own bit. So you have the property you've identified, and you have a mortgage lender willing to give you the mortgage loan, and then you're just looking for your own contribution, and you're using a portion of your RSA for that.
Thank you so much, Olaji. Onyeko and Mr. Oguche. So this question might just be the funniest and maybe the wisest question I've seen today. I don't know where it falls within.
Okay.
Are churches supposed to remit pensions for their pastors and other workers?
Okay. Before I answer that question, just to say, again, the essence of this session is to bring the public closer to the pension funds. Sometimes the pension funds can seem high up there, and some of the acronyms, AUM, RSA can seem so out of this world. So we just want to bring the public closer to the pension industry and answer any and all of your questions. And this is one of them. So the government says that if an employer is employing more than, I think it's 3 people, a private sector employer, he must remit pensions.
Yes.
So what we need to ask is, are those pastors, are they in the employment of the church? They receive salaries. So if you do receive a salary, then you should be able to get a pension. So as your employer, whether it's a church, whether it's a mosque, if they are employer registered in Nigeria, as you're sending your salary to your accounts, they should be sending 8% of that to your pension fund administrator. So from a legal point of view, a church that employs more than 3 people, and if pastors are in employment, they have a contract and employment, then they should be remitting. That's what I will say, but let me jump to Adetumbi to give some color, and I could ask any of the other panelists to just chip in. Adetumbi, your thoughts?
I have a question.
Okay, before you go ahead.
Before Adetumbi comes up, are pastors not spiritual leaders? Are they supposed to be getting paid?
They're human beings now. They're human beings. Some of them, many of them get paid salaries.
Okay.
So, many of them are staff. So they are staff people.
Because I know they're admins, there are maybe sanitary people that do, but
So how do they eat? How do they feed their families? It's not by
bread.
bread from heaven.
Bread from heaven,
Yeah,
manna.
So many of them get salaries.
Okay.
And if you do get a salary, you should get a pension because you're going to retire at some point. So they don't have a defined retirement age, and I think it's left to the church to now define that when it's your retirement age. But let me hear from the guys on the ground. Some of you might have some churches as your clients or some pastors as your clients. Adetumbi, do you have some as your clients? Let me hear from you.
Very interesting. Well, as an institution, as a church, pastors, they are all paid and they actually pay taxes. So they also they remit. We have a lot of institutions remitting. They must remit. Once, like we said, once you have more than 3 employed, it's an institution, it's an organization. Let's leave. Don't let us go there. It's still an institution. So, and they're employer of labor. So they must remit. And they remit. And it's maybe not 100%, but we have quite a number of them on our employer database, remitting monthly and regularly. So they must remit. They are not exempt. They are not in the list of PSS or anything. Thank you.
Thank you so much. That's so cool to hear. So before we move on, I'd like us to just speak a little bit about some of the acronyms that we hear, especially when it comes to pension. Because I have a question here about what exactly are the closed pension fund administrators. So we have PFA, which is pension fund administrators.
Yeah.
We have the closed pension fund administrators.
Yeah.
We have CPS. We have contributory pension scheme. And we have RSA. They're just a lot.
AUM.
Yes. So that doesn't seem very foreign to people. Some of this little lingua that we use in the industry. Could you just expatiate, especially PFA, CPSA, and the likes?
Yeah. Okay. So the PFA is the pension fund administrator, and they are the ones that, as the name says, they manage your pensions, they administer your pension. So if you retire, you go to your PFA. They will calculate how much you're meant to get, and they will give you a lump sum, and you get it on a monthly basis. So they administer it. If you've lost your job or you've resigned, you go to them. They administer it. They also manage the pensions on your behalf. They invest it on your behalf. So they administer it. They do most of the administrative bits. The PFC is the pension fund custodian. They are the ones that keep the assets of the pension funds. So the pension fund administrator, the PFA, they don't keep the assets in their vault, right? They make the investment decisions, but the money is kept with the PFC, the pension fund custodian. And the pension fund custodian must be a subsidiary of a bank in Nigeria. So we have 3 PFCs in Nigeria. First Pension, owned by First Bank, UBA pension owed by UBA, and Zenith pension owed by Zenith Bank. So that's the PFC, the custodians. Then we have the CPFA, which is the closed pension fund administrator. They do the same thing that the pension fund administrator does. They invest the money on behalf of the contributors. They administer the benefits, but they only do it for a company, closed. So we have 6 CPFAs in Nigeria, and these are typically subsidiaries of multinationals. So we have Chevron, closed pension fund, meaning that they only manage the pension of Chevron staff. Or we have Shell, closed pension fund administrators. We have Nestle. We have Progress Trust, which is a subsidiary of Heineken, Nigerian breweries. We also have Total, CPFA, which is just manages the pensions for Total, and Ajib, Nigeria Ajib, which just manages the pensions for Ajib staff. So these are the closed pension fund. AUM is assets under management. You know, I said the PFAs manage assets on behalf of the pension funds or the RSA holders. So these are the assets that they are managing. So each PFA has their AUM, their assets that they are managing. And they manage it on behalf of the RSA holders. The RSA holders retirement savings account. So if you are listening to this and you have a pensions account, you are an RSA holder, you have a retirement savings account in your name. I hope that's helped. If there are any other acronyms, hopefully we can get through that.
Definitely. Thank you so much, Mr. Oguche.
Right.
So this person seems like someone who definitely needs an answer. So my previous employer I worked with between 2015 and 2018, a microfinance bank, did not remit my pension, but has currently folded up. Do I have the hope of getting my unremitted contributions?
Unremitted. Okay. Onyinka Sola, can you take this? Does the person have a hope of getting unremitted contributions because the firm has folded up?
Okay.
That's a tough one, huh?
So when we folded up, the question to kind of. Hello, can you hear me?
Yes, I can hear you.
Can you hear me?
Yes.
Yes,
okay.
We can.
So the company folded up. Okay. But at the point of folding up, so the first question is where, when you folded up?
The circumstances.
Somewhere else or anything. Is there anybody we can contact? Circumstances. Okay. In that case, because typically, if the company hadn't folded up, they would have been. But now that it's folded up, I think there will be a bit of an issue. But then again, it's a microfinance bank. Does NDIC have anything to offer them there as far the staff from there? So it's under financial services. So I would expect that they would have been at the point of liquidation whenever they were folding up. There would have been a plan there. So if they can make reference to that, they may not be at exactly what they earned or what they should have gotten. But I think we will be able to, no matter how small, maybe the recovery.
Okay, thanks for that. So if the company was folded up, like you said, it's regulated by CBN and NDIC, so there might be a schedule of payments for creditors on liquidation or something like that. And the employees might get something, right? But this is not from the PFA angle. It's just the PFA can't do anything in this regard, right? It's now the company and the staff, maybe the union coming together or something.
Yes.
Okay.
But in an instance where the company is still existing and they're not remitting, as long as they're making deductions, most definitely there's a case in which the PSA, we call it National Pension Commission, to ensure in fact there will be a penalty for non-remittance on those funds as well.
Great.
All right. So I just thought to also chip this in based on the next question I'm going to read out. One thing I know for sure is that people always ask, so my father died, my mother died, I can't access our pension, our gratuity, anything. And they always like, why? One of the main issues I know for sure is that there's a difference between next of kin and there's a difference and a beneficiary. We need to be very mindful of what sometimes it's always good to have information. Ignorance isn't an excuse, but we need to take note of these two separate entities, next of kin and a beneficiary. A next of kin doesn't have access to your funds, but a beneficiary who has been stated in, what do I call it now? Is that a will?
Yes, in your will.
Yes, that's the only person that has access to your funds at the end of the day. So this question says, how can a dependent of a contributor to the old NSITF, who happens to be late, have access to his pension fund?
Okay, Balaji, let me have you take this question. So how can a beneficiary of someone on the old NSITF have access to the pensions of a late person? Balaji, did you get that? Balaji, can you hear me? You didn't get that. Okay, Jumoke, can you take the question again?
Okay. So the person asked, how can a dependent of contributor to the old NSITF, who happens to be late, have access to its pension fund?
Okay, so you're saying the contributor had NSITF contributions, right?
Yes.
The person has passed.
Yes.
Yes. Once the beneficiary is able to provide the necessary documents, for example, a letter of administration in the absence of a will, and documents like the death certificate and his or her own bank details, yes, the PFA can go ahead.
So will the person approach the PFA?
These NSITF contributions are sitting in the RSA. Is that what we're saying?
Okay, I'm not too sure exactly, but
okay, if that is the case, then what I said is the answer. The NSITF contributions are in the RSA, and the contributor has passed.
Okay.
The beneficiary will provide the necessary documents like letter of administration in the absence of the will, documents like death certificates, and the bank details of the beneficiary. With those documents, basically, the PFA can obtain the payment approval from the company.
Okay, great. I hope the person has heard.
I hope so too. So don't let me ignore LinkedIn. I have a question from LinkedIn. What can be done to reduce the long period of time retirees have to wait before they
access their benefits?
I guess yes.
Okay. I'll have Onyeko answer this. Someone is asking what can be done to reduce the amount of time retirees wait before accessing their benefits. Right? I got that.
Yes.
Okay. Someone is asking what can be done.
Okay, so something to note is at the point where people are working, the key thing is to ensure that as much as possible all your data is updated. So when I say data, key things and from the advert, you'll have seen there was something on the NIA. So please ensure that all your information is updated. So for example, I have a consular on some documents, I have a consular on some other documents. That is going to cause a problem at point of retirement. Ensure that my name is the same everywhere. I can't have a football age somewhere, so maybe I'm 1920 somewhere, I'm 1930 and my date of birth. Those cause issues because you need to do data recapture. That's like a KYC in the pension industry. Now for that I need NIN. Now if with my employer I have registered because I meant to be a certain age, I registered and put 1930 and my date of my year of birth. Then with NIN, I went and put my original age, which was 1920. You know, when I'm going to do that data recapture, it's going to sync with the data on the NIN database. There will be what we call a mismatch because 1930 and 1920. The question is, are we talking about the same consular or is somebody else? You know, so to ensure that my name is the same, my date of birth, my records, everything is the same. This is for whether it's the public sector or private sector. That's when I say government employee or in the private sector, just ensure that all your details are accurate across board and clean. All your records are clean. Now, if I'm in private sector and my employer requires maybe something along the lines of it, clearance or so. I need to make sure that I do all of those things ahead of time. So that at the point when I need to access my funds, there's no issue. So that they can remit whatever outstanding they have. The same thing with federal employees. Usually they have a clearance, yes. For them, they have a clearance. Now, with federal government, there's something called the approved right. It's like people, the scheme to like the scheme thing, and they need to do those computations. That may because I mean, even right now it's much faster now, but ensure that all you is done. Now, for federal government employees, there's something called the enrollment that has to be done annually. So if I'm going to retire next, doing enrollment for things before retirees, ensure that the enrollment is done at the right time. At that enrollment period, and what I'm supplying is all service with the federal government to ensure that my account, to be sure that the money that should have been remitted have been remitted so that I can be paid. If there's any shortfall, they will make sure that they remit the money. If there's any overage, of course, I need to let go of that. But assuming all of those things are fine, once everything is fine, at the point of retirement, your process should be seamless. And I've had that with professors and even those in private sector as well. So for private sector, once they have the same data everywhere, we're going to do the what we call the data recapture, the DRE. When we do that, it goes seamlessly, and on the system, and we can process their benefit applications, and they're fine. Whether it's program withdrawal, annuity, or whatever it is that they want, they get it, and it's agreed. The same thing for federal government employees and state government employees. When they do the enrollment, the verification that they should have done at their appropriate time, their money is coming, and at the point when they are retiring, they're getting their funds. So the key thing is to ensure that as much as possible, your data is complete, it's clean, it's accurate. It is very critical. Very, very critical that your data, you are not the same person everywhere. Thank you.
Great.
Thank you so much.
So before anyone is retiring, I mean, at least a year or 2 years before you retire, make sure you're getting all your ducks in a row. Your data is clean, you've done your data recapture, you're getting your clearance, and everything is okay. So that's well said.
So before we close, I have one question, and I just have to ask it.
Okay.
Any job opportunities right now in the pension space?
Job opportunities, let me see who can answer this. Okay. So yes, let me take a stab at this. So currently there are 19 pension fund administrators. There are 3 pension fund custodians, and there are 6 closed pension fund administrators. So there are job opportunities in all of these firms. They always continue to hire because they are growing, right? So they need people in technology, they need people in data analytics, they need people in investments, they need people in operations, they need people in HR, they need people in legal, like I said, they need people in IT. So yes, there are job opportunities within the pension industry on various levels, whether it's in investment, whether it's management level, whether it's in operations, whether it's even brand and communications. So yes, there are jobs within the pension industry. Like I said, there are close to 30 firms, and they're always looking to hire and employ. And as they grow, the industry is growing. It needs to get more people. And we will look to sort of do a curation of jobs over time. We will hopefully will do that. That's one of the things that we'll probably sign up with. So how we're going to get these jobs and let them make known to the public, and also how some of these questions can be coming to us so that we can answer them real time.
Yes, thank you so much, Mr. Oguche, for that. So let me just list some of the channels you can reach us. So we have our website, www.penop.com.ng. We're on Twitter, Facebook. On Instagram, it's PenOP NIG, also PenOP Nigeria. You can reach us, send us a DM. Be free to ask us any questions. We're here to answer. This session doesn't have to end here. We can always take the conversation elsewhere. Facebook, Twitter, LinkedIn, and on YouTube, Instagram also. All our pages, PenOP NIG, you can find us on all platforms. Also, we have a page on our website where we have jobs. We once in a while, when there are job vacancies at the PFAs, at the PFCs, we usually put them on that page. So be sure to check there once in a while as it gets updated. It could just be that season when you're looking for that you find something. Thank you so much for joining us on this session. This is definitely not going to be the last. It's the first. Thank you so much for tuning in. We know we've taken like 2 hours of your time already. Thank you for using your data on us. We really, really appreciate it. Next year is coming. The season is already ending. We're already in Christmas, and we really hope that this season is filled with so much blessings that you take it into 2024. We're going to have another one first quarter next year. Be sure to join us. We are already excited about it. Every question here that we might not have answered, we'll take note of it. We'll try and create an FAQ on our website where you can go get it. Remember, the website is www.penop.com.ng. Mr. Oguche, any last words?
Yeah, is that why you're wearing red? You say Christmas is here.
I'm just getting into the spirit. I'm getting into it.
Yeah, but regarding the jobs, I mean, if you get a job in the pension industry, one thing you can be sure of, your pensions will be paid.
Every month. I get my alert every month. And I know how much interest I'm always very excited when I see my pensions. Being a PenOP has been an entirely different scene from where I came from, where I was being employer. No, don't let me cast them. Don't let me cast them. But it's really awesome being in the pension industry. It's not for the old people. I'm not yet 30, and I'm working in this sector, and I enjoy every bit of it.
Yeah. So we're looking to hire more people within the industry, but really, like I said, we really want to get closer to you guys. Pension is not a scam. If there's anything that you have taken from this session, pension is not a scam, right? Don't say that if you haven't gotten to the age where you want to collect your pensions and the PFA has folded up or the PFA didn't give you your money. It's not a scam. Many people are receiving the money, and we'll keep on showing people that have received the money, people that are getting their mortgages, they're getting their houses, people that are getting paid, people that their investments has been growing, right? There might be some teething problems here and there, some delays maybe, but I hope some of the answers here have been able to help you. Things like before you retire, make sure all your documents are in a row. If you have a relative that is dead, these are the documents you require. So please let us know, like she says, contact us on all our social media channels and our website. And we want to ensure that you are closer to the industry and you get the benefits of your pension contribution. Pension is not a scam
at all.
And we do love you. We hope you keep contributing, and we hope to keep serving you better. Thank you, and have a great day.
Thank you, everyone. Bye.
Can I get up? Oh, thank you.
That was a marathon. 2 hours.
So you need to give me something to drink.
It started.
Abio.
It started gradual.
Oh my God. Almost. I see they try.